Hi everyone, welcome to Analyze Your Trade, episode number 79 for May 28th, 2019. Today we will be discussing your trade ideas. So over the last few days, about 20 people submitted up to 5 symbols each, and I've put the list together of the top requested symbols, which you should be seeing on your screen right now while I'm talking. And we're going to get through as many of those as we can today. We are broadcasting live on YouTube at 4 p.m. Eastern Time, but you can also listen to the audio-only podcast version of all episodes of the Timing Research shows on iTunes, Spotify, Stitcher, Podbean, or wherever else you listen to podcasts. Just search for Timing Research and subscribe. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today I have Mike Pisani and Michael Filighera here. So I'm going to go ahead and turn it over to Michael.
And David, thank you very much, and good afternoon, everybody. And I'm checking out this list that we all have today, and we've got some really good stocks to talk about. And so thank you, everybody who sent in, which I believe is going to be a really fun list to kind of go over and to discuss. But before we begin, right now it's just Mike Pisani and myself. So I'm going to turn it over to Mike so that he can introduce himself again and let us know a little bit about him.
Michael, pleasure to be on with you again. David, thanks for having me. My name is Mike Pisani. I've been trading since just after the financial crisis, self-taught trader. I specialize in using technicals and options flow to tell me what to be trading, either for day trades or swing trades. And my website is smartoptiontrading.com, where if you're interested, you can come in there and find out all about me. I'll tell you more at the end. But really, to me, it's all about looking at the markets and using the option flow to tell you what names they're playing with, or really just give me an idea of what they think of the market. And like, for example, this afternoon, there was nothing but put sweepers all over the indexes before the markets broke. That was your clue that things weren't right in the markets today, right? Before we actually broke down on the markets, they were all over them. They were all over UVXY, and then one of the triple leveraged bear ETFs, they were buying calls on it. Those are usually signs that they're expecting something, that something's not right. And you can use that in your daily trading to say, I need to be more careful. And that's what I like to do.
I like that too, actually. I think that's a very nice thing. And I'm checking with you later to get that scan. Is it, well, just because it's just me and you and our audience, is that a Thinkorswim scan?
No, I use Trade Alert for my options. I find them to be fantastic. I have it tweaked to my own personal needs and how I want it to work after using it for years and figuring out exactly what I want to see and don't want to see.
Exactly, right. So you've got the scans down the way you need them. Perfect.
Right, but today it was the SPXS. They grabbed 3,000 of these things on a sweep above ask before the markets broke late morning. That for me was very telling. July 19th. That told me, hey, wake up. Something's not quite right. They wouldn't be coming after a triple leveraged ETF with that kind of size and aggressiveness if the markets were good.
And the next thing you know, the S&P is down 27.5.
Exactly.
Right. Well, nice, huh? Hold on a second.
Tell us about yourself, man.
Yes. Hi, my name is Michael Filighera. I am the proprietor and the chief cook and bottle washer for logicalsignals.com. Right now, I still remain in the process. I am getting closer, but a lot of other things tend to get in the way as I'm doing some major changes with what I want to present, how I want to present it, and how I want to get some additional projects going. What I can say to look forward to is a new, more revamped website. And within the website, I'm going to be doing some daily updates and probably more like a blog. And it's going to be my views of the equity and some of the futures markets. Basically, because that's where I spend my time now. That's where I do a lot of my trading. And so what Mike just brought up is an excellent thing to include, and these are going to be all included and hopefully on daily updates within the website. And also I continue to work together with another wonderful trader in the candlelight trading room. And so that's also coming into play. Working on trying to get together a trader-funded program, one that I feel may be fair and honest. And so I'm looking forward to getting that off the ground and also hopefully starting a hedge fund. These are all my 2019 projects that are still bubbling and coming to fruition, hopefully before too long.
Nice.
I know, but I'm going to start it the way that Mike starts it when he moderates, because I think it's an excellent way. And we're just going to give a quick view of what each one of us thinks market conditions right now and how things are going. Mike, I'm going to let you start.
Concerning. I think I used the word bitchy a little while ago when we
You
talked
did.
about it. For me, and if you see what I do here is I always put a 5-minute chart and a daily chart next to each other so I can look at these side by side as I'm trading through the day on the SPY. But, you know, this market tells a story. And you look at this chart, you had this beautiful bounce, you know, that nobody wanted to be long this market, right? Everybody hated this bounce, probably the most hated bounce in history. And then, you know, as I've told everybody, my subscribers, everybody, this day, Fed day, was your warning shot. You know, made a new all-time high, broke the 8-day and closed on the lows. That was your day to say, I need to think carefully here, reduce risk. And then since we broke the 21-day on this day, on the 7th of May, we've failed every retest of it. And now we can't even get above the 8-day today. So, you know, this market to me is trading on fear. Money's flowing out. You know, we tested 280 down here. We're just above it today. We just basically came into it on the close. That's your 5% pullback. So we've done the 5% pullback as of a couple weeks ago. Your correction of 10% would be all the way down here at 265. And the market basically, if we can't hold 280, then you got your last stop line in the sand for me is 277.50 where the 200 days. If we lose that, look out. You know,
yeah,
I really don't like the way this market's trading, Michael. I think that, you know, they're afraid to buy the market and they're trying to get retail to buy it so they can sell into it.
And your last sentence to me sums the entire corrective phase that we've just seen, ties it up in a neat little ribbon. And that is trying to pass the buck on to retail to come on in, the water's fine, come on in, keep buying. And I don't believe that retail has taken that bait. Maybe some, but the general folks that are out there are like, no. And for good reason, I believe. I also believe that the markets have been very difficult lately. But then again, I always find myself having more difficult trading a corrective bounce, in this case, from that wonderful low that you showed us in the spiders up to that all-time high. That, to me, is nothing more than a corrective bounce. Then it gets to the all-time high, puts in a new one, and fails miserably. Yep. And I think that whomever, the powers that be or whoever, felt that they run it up there and push it to a new high, that's going to trigger a whole bunch of additional buy orders, and then we'd be off to the races. And it turned out to be directly the opposite. As you very astutely pointed out, the market did nothing but just kind of drop down, closed below the 8, and it's been downhill ever since. And now the bounces can't get itself back up to where it needs to pull in more attention. So I agree with what your statements are, that the market definitely has been telling us a lot. And here's another tell for me, that last week prior to the holiday, I noticed, and actually the week before as well, that overnight Europe was selling us. They were selling the U.S. They were selling their own markets as well, but the U.S. was being dragged down with. And then as soon as U.S. was up and online in the morning, boom, they just started buying it and bought it all back up. Yep. I saw that happen day after day after day, and I thought, okay, this to me is not really being done, because I personally could not balance it out against, why would we have this wave of buying well, we've got this news, or we've got this positive, or we've got something happening in the China trade wars discussions that's going to throw a positive spin, or et cetera, et cetera. And in fact, we didn't have anything.
That's a great point.
Yeah. And then it just kept going down. Now, add on to this what I think they're now definitely going on to, but I want to tell you, and I know this is not anything that we're not discussing, but the 30-year bond had a wonderful decline off of the 170 level all the way down to 136, which was beautiful, came off, everything looked great. And then I truly was expecting a bounce, and I threw up my Fibonacci's real quick, and the top number that came in that would have been perfect for it, 152.
Look at that, 152.
Look where it is, and it's a beautiful, clean three-wave rise.
And they're pricing in another rate cut, is what the bond market's saying.
They're pricing in another rate cut, but I believe that they're trying to price in a rate cut based on the fact that they want people back in the equity markets. And this is nothing more than just finishing off a corrective bounce. Now, could I be wrong? Absolutely. But I'm just saying the way that I see my analysis, I am now flipping hedges in the bonds because that's a core position for me, and it's a short. So through this entire rally phase, this corrective phase, I just put some hedges on, which protects the short and makes money.
Smart.
And so now it's lifting those and you can get them off. And I'm the type of I get them off in a hurry. So when I see the bonds going up $1, they're over $1 higher. That's to me is like, and I bet you if I go look at the volumes is probably really crummy. In any case, I don't have a lot of very positive things to say about the market. And the reason being is like, what astounds me is gold's being sold, bonds are going up, and the market's real iffy.
It's waiting on China news. It's waiting to, it's.
I think it's waiting for more than just China. I think there's a lot of stuff going on within international waters and within our own country that the market just doesn't want to factor in. I couldn't tell you why, but normally gold would be probably at $13.79 and not $12.79 because it hates uncertainty. When things become uncertain, now part of what the bond market rally, okay, I get it. There's a little bit of political uncertainty. There's some international uncertainty going on. And so there's safety in the perceived notion, safety in the U.S. bond market. Okay, I'll give you all of that. But I think that something's about ready to bust. And what you mentioned today about that sweep and the spiders coming in for puts in mass.
Yep.
Take the hint. Take the hint. So, but anyway, we could talk, Mike and I could talk about this for days, and that's not our job for today. We're going to get back and we're going to start talking about some stocks. The first one on our list is a favorite, at least within this context of this program, and that's Advanced Micro Devices, AMD. And I'm glad it's number one because Mike and I were talking just before we went live, and it's one of his ones that sit real high on his radar. So I'm going to let him begin today, and then I'll give you mine.
Perfect. So AMD, I love. I was on the show last week, and I told everybody was going over names, and I said, don't look at Intel, don't look at NVIDIA, look at AMD. And the reason is AMD has been acting different. When you look at the other semis, this name has been trading sideways and strong and not selling off when every other semi was selling off in this market. And it basically, see this box, I put this on there, this is a box from basically 26 to 28.50. It's just been in that range. You could buy it off of 26 without a problem with a stop just underneath it and generally sell it up at 28.50. And then today, look at the volume today. In a market that was horrible and down, this thing held in like a shining beacon. And they did a presentation today at over the weekend, at Computex or something, whatever it was, 2019, and they talked about their new chips and how they're taking over gaming, and they're just eating into Intel, they're eating into NVIDIA, and it gapped up. It was closed just above 2640, right around 2640 on Friday, gapped up and opened up not quite $1.80 higher, and then it just exploded on volume on that first five and took off. And for me today, I got myself into Square and Beyond, and I had way too much risk in terms of 1,000 shares of each of them on the right away on the open. But if you missed it, they kept coming after this thing all day. They were sweeping weeklies, monthlies, Julys, Octobers, nonstop, all the way up into the highs today. It wasn't until the market started to sell off we saw any type of put protection into it, which was all short term. And what I tell people, if you miss it, you still want it, you look for a flag break. So on the 5-minute, when it took out 28.45, there was an entrance there on this candle. If you missed that, I used the ATR stop. It gave you multiple chances here during the lunchtime hour. You could have tried it again off of 28.80 area with a stop 10 cents under it, never been violated. And this is the type of name, when you see this volume, I think this thing has room to run. It's been consolidating. You look at this chart, you look at this on a year, it hit 34. It came in, it pulled back, it consolidated here. Right now it's just under 30 again. It takes out 30. There's not a lot of resistance left up here.
Yeah.
And then you look at names like Intel. They're dumpster fire. Right? NVIDIA. Why would you want to look at these names? So AMD. Now, would I chase? I told people I wouldn't chase it here this late. What the heck? I have helicopters all over me all of a sudden. Must be under attack. I would have chased, late when it was in the highs, but I would watch any dip on this thing. I think is a buying opportunity. How about you? Michael, you there?
Yeah, Michael, you there? He was having some power issues earlier in the day, so it might be. So yeah, if you want to just go ahead and go on. Sure. Hopefully, I'll be back in a minute.
For me, AMD, probably one of the top names I love here. I love how it took out this box. I've been talking to my subscribers, people on Twitter, and everybody about it for weeks and months, saying this is the name. If there's one semi, this is the name I want to be in. So I would keep an eye on this. If it was to come back and retest this 28.50 and held, that would be a great sign. And then I would look to see if we can get a trade out of there, take out 30. And once you're off 30, there's just not a lot of resistance for a move back to the 52-week high. Kind of like that a lot. So with Michael gone, there? We'll move on to Exxonmobil. I don't know what to tell people about energy names. Energy has been weak all year. Exxonmobil here is really looking just particularly weak. When oil kept bouncing, these energy names were struggling to get going. And here you got a big breakdown again on ExxonMobil today. It put in a high up here of 82. It's back down to 72. It's below all the moving average. You had big volume on this move down again today. It's got this area down here where it's found support around 71, 73 that maybe if you really wanted, I'd give it a try. But right now, there's just no type of interesting action going on in these energy names. Other than the APC acquisition, we haven't seen a lot of activity in these. Today, of all names, it was Devon that picked up a ton of call buying into Devon today. And, again, I look at this chart and say, why do I want to be in Devon on all this call buying? And, but, it's oversold, but they came in. They were hitting the July 26s, the July 25s. They were coming into these throughout the day. There was good call buying in this thing. We saw a decent amount for the name. But again, I look at this chart and say, what do I have to get? And I think I ask myself with all the energy names, what do I have to gain by here? What's my setup? The Iran tensions are kind of being blown around out of proportion. The market, oil's not rising on it. Oil's coming in. If these things couldn't accelerate back to highs with oil was strong, I don't understand how they expect them to go back up here. So for me, I would stay out of the oil name for now. Let it sit tight. Look for other names. There's better places to play. And with the market in the mode it's in, I'd be very careful with longs on anything until we get a clearer signal here at this point in the markets. And so for me, there's just nothing here I really love right now. Unfortunately, Michael's not back yet, so I'll just keep going. We talked about the SPY. Somebody's asking about Palo Alto, PANW. So Palo Alto it has earnings coming this week. So we're about to get earnings on Palo Alto. I think it's Wednesday night, if I remember right, or Thursday night. Let's go take a look here. PANW. There it is. It's on the 29th, so it would be tomorrow night. So tomorrow after the close, we get earnings on Palo Alto. By the way, FireEye just came out. They made a small acquisition, and then they guided down. I'm seeing that here as well. They lowered their guidance, so I'm seeing that here as well. So that's in the same sector. I like Palo Alto because it's one of the better names in the security sector. It can move bigger than most names. It's going to be strong, but again, it came up here, it flagged, and it's really been unable to do much of anything. And here it is testing its 200-day going into earnings tomorrow night. When I have a name that's going into earnings, I really don't want much to do with it. And I think what I mean by that is I'll look at a name and say, this is not for me. I don't want to trade a name going into earnings. Now, maybe there's a scalp trade to be had tomorrow if I really felt aggressive, but I'll wait till after earnings to figure it out. You know, if it loses the 200-day, it's now below all the major moving averages. So, you know, this is a name you kind of have to be careful with. When I look at the implied move, okay, they're expecting a $16.70 move. So from 214, you know, you could expect this, you know, they're saying, the market makers, before they pay anybody, they're expecting this to be up at either 230 area, right, which would bring it all the way back up here above the 21-day and the 100-day again in the 8-day. Or they're kind of telling you they're expecting this to be down somewhere around 200, which brings up support from this area here. You can see it's held that multiple times. That 200 area has come in and been support. So those are areas I'd watch tomorrow to see how it holds in there after earnings tomorrow night. And then if you like it and you like what they said, that's when I would go in and take a look at that at this point. So for me, I'm going to pass on this after earnings. Microsoft still remains to me one of my favorite names right now to look at and to watch for longs. And the reason that is the case is because Microsoft has been just so strong out there compared to the rest of the market. When the rest of the market has been selling off, and let me just quickly switch to the Qs, right? And you can see the Qs, you know, after putting a high up here of 191, we're trading today at 177, just off the lows of the year. You look back to Microsoft. Microsoft's going sideways. It's holding in really, really nice here. You know, it tends to have power when one of the first names in the market decides it wants to bounce, like on Friday. It tends to be one of the first names that comes out of that move with power. You can see funds coming to buy it. You know, it's still above all the moving averages. It's still holding in well. It's kind of a little flag consolidation pattern up here, a little pennant going after this big move, right? And that big move took us from 114 all the way up to 131 and change. That's a pretty nice move on this name. That said, it's a little extended. It's run a lot. All right. Microsoft generally doesn't move like this, but they're in that space. They're kind of killing it right now. And so for me, this is a name that on any market bounce, I want to be involved in until it stops to work. So watching this today, even in the weakness, right, you have a reversal candle today. And what that means is we traded above the previous day's high and closed on the lows. We pretty much engulfed it, but we held the 21-day. So if the market dipped and I got a pull to the 50-day here, I think that would be a gift to me. And I think Michael just came back in. Michael, can you hear me?
I can.
Welcome back, my friend.
Thank you. Well, this is what you call, you know, when you live in California, you become at the mercy of Pacific Gas and Electric. And a transformer blew at the end of my street, and they said they were going to get it repaired. They did, but I guess they were tweaking it. So anyway, you're on Microsoft.
I'm Microsoft. So take yourself a second. So for me, Microsoft here remains a strong buy on market bounces, but I need to have the market at least being neutral or in my favor. I'm not just going to just take this thing here. I'm going to wait to see what this market wants to do, or especially since we're testing 280 today.
Right. I actually think that Microsoft needs to, I think it's going to move lower. Now, whether it's going to really come down, you use much shorter term, some moving averages. And when I'm looking at something on a little bit bigger picture, I just really use the 200. I don't think the 200 is going to be met, but I do think that the 50-day.
Is that
the 50?
The 50's at 122.85. The
I
100's
think
at
122.85 is definitely in the near term picture.
And I think that would be a gift in this name.
Yeah, I actually do agree with you on that. But it just seems to me that Microsoft, as with many other NASDAQ stocks, I should say, or just tech stocks, does need to come back down. It's finishing a corrective phase. Now, 122.80 is definitely within the picture, but I believe it's going to come down, not maybe as low as 114.95, 115. And that would be a super gift, but that would complete a three-wave pattern down. And that should find support, unfortunately, from 120 down to 115. That's the support zone for that move.
Question.
Now, what could interrupt this is, of course, we just got to get through June, and then we're heading into earnings again.
Ugh, please don't remind
me. I know it seems like everything else. It's just a constant rolling pattern. So, but I do feel that Microsoft remains a solid company. Microsoft remains with some really good stuff on the table to work with, but Microsoft cannot escape a broader market correction.
So can I ask you a question?
Of course.
Do you think if the markets don't sell off, does Microsoft come down to 114, or does it need the markets to get there?
It's going to have to either deliver some really bad news.
And it has it now for multiple earnings periods.
I know. They've been very stellar. In fact, the last one was extremely stellar.
It was a thing of
but I actually no. Yeah. I don't think that it'll come down there all on its own. But again, because it's in all the indexes and is a major player in the S&P and the NASDAQ and the Dow. So, I'm looking at this going like, well, it cannot escape a broader market pullback. And whether it's corrective or whether it's the start of the new trend, I don't know. That's yet to be seen, but it will not escape. It may escape severity, but I think that if Microsoft were to lose, well, it's already down. It lost $9 off the high, or close to.
But again, and then bounced back up. So much relative strength compared to the overall the markets themselves and the Qs.
I don't disagree with you, and in fact, my momentum indicator suggests that it really shouldn't have too much further to go. And I'm looking at a daily. If I pull out and looked at the weekly on Microsoft, it probably is going to look a little bit more sketchy in terms of like it could, yeah. On the weekly, again, my 200 days on the weekly sits at 83.5. I really do not see. If it goes down and breaks 83.5, folks, and you're still in it,
if it breaks 83.5, this market's in a whole hell of a lot of trouble.
Exactly. That's my point. Yeah. That the rug is being pulled on everything, and it's just a massive race for the exit. So unless you get that catastrophic move going, I don't see some serious downside in Microsoft because they continue to really produce some pretty good stuff and maintain. And I think that the competition for the cloud is what's going to be able to keep a lot of these tech stocks in business. Agreed. And I think that Microsoft is well positioned, along with Amazon, to capture that. I know everybody thinks Amazon is the big retail stock, and it is.
No, it's their cloud.
Don't get me wrong. And to tell you the truth, it's not on our list today, so I'm not going to go there. But Microsoft is well planted to take advantage of the cloud business. So I personally would let the market finish this pullback. So again, the parameters would be that it cannot break above 131.40. A break above 131.40 really begins to tell you, hey, pullback's done, and we're going off to the races again. And then I would expect substantial new highs off of that. And I'm going to go out to my monthly on this one. Wow.
That's been
there's a little bit more room. I don't know how much higher really can get without pulling back. Even my monthly is beginning to look like it's tired of these numbers, and it needs to kind of pull in here a little bit and consolidate. So I'm going to stick with the consolidation happening before anything else really comes in before that. But I do like Microsoft, and I like what they've got going for the future. So if you're long this stock, folks, then I think that's like, just put some protection under it.
Sell some cover calls.
You know, either. Depends on what they favor. You know, you could sell some calls. You could do a vertical, you could, bearish spread. You can buy puts.
Exactly.
So there's a lot of things to be done, but if you've got the position, it's a solid company. Protect your position and be prepared to know how to roll, because corrections may take a lot longer than you think.
We've gotten very used to very quick corrections.
Position, and this thing's going to kick in July or August, and then you're going to be rolling out. So make sure that you're gauging it for time-wise as well. Next on the board, Tesla, and you've already got it up. There's a lot to talk about with this company. Oh my God! But you're going first. I'm going to let you go first.
I brought a weekly chart up to start. The reason is this weekly tells a very powerful story. This was not drawn. I've had these lines have been here forever. You have a channel now for the better part of 4 years. Basically 180 support and big resistance up here around 385. And this fall has been, Wall Street's finally capitulated on it. So what I'm telling people, I've been telling my subscribers, is you got to be careful just blindly shorting this at this point. Even on the weekly chart, it's getting oversold and it's extended, right? The AEMA on the weekly chart is all the way up at 227, right? It kind of reeks that it wants to try to bounce. It's out of the Bollinger Band on the weekly charts. That said, I think Wall Street, Michael, has turned on this name. I think they realize there's no more money to be made on it. There's no more secondaries to do, so no reason to prop this thing up. And I do believe this thing is a short on any bounce longer term. I wouldn't just short it here. And I've been watching for a reconnect with the 8-day, and this name is so weak, it hasn't touched the 8-day since all the way up here back on May 7th on the daily chart. It can't even get to the damn thing. That's how bad this thing has been at this point.
Where's your 8-day? 201?
That gold line right now is at 201.91. It's way off of it. Still 12, 13 bucks off of it here, even though the thing's moving down on it's parabolic down at this point.
Right.
And I look at this name and I don't want to touch it. I don't want to be long it or short it. I want nothing to do with this name. I've just come to the conclusion it trades sloppy. There's too much tweets from him or garbage or something like that. And I just decided that this name's not for me anymore.
It almost feels to me that Elon Musk is ready to walk away from Tesla, sort of, and put his energy into SpaceX. Now, if he's going to be able, and in solar power.
But you don't hear anything about solar anymore from him.
He's still there. He still plays the space, and is still putting money into it. But I think that Tesla, it's reacting to just the fact that it doesn't have a lot of hope right now. Where before there was, particularly, they're based here in the San Francisco Bay Area. Their factory is down in Fremont, which is closer to San Jose than it is to San Francisco. But the big question that's been coming out, at least around here, I don't know how broad the news gets away from the Bay Area, is who's left to buy a Tesla?
Great question.
The market here, we are very, very saturated with Teslas. So without international sales somewhere, who's left? Who's really interested in putting out between $40,000 and $100,000 for the Model 3 and $125,000 to $200,000 for the Model S and $125,000 to $250,000 for the Model X?
Which are all having huge quality issues.
Right. Right.
And
Exactly.
repairs.
Right.
Yeah.
So it's got a lot of negative going. So when I think that before I would even touch this company, you have to figure out how you're going to come up with fair value. And so you really need to go and talk to a fundamental analyst who's going to be able to go in and look at cost, stock, what it costs to build that car, what they have to sell it for, what really is its exposure to China. What is that really all about? Because I believe they still have the batteries made there.
Well, they're opening a whole plant there, aren't they?
Yeah. And they were, because they were supposed to open that battery plant here in the States and didn't happen.
Right.
So I don't foresee a bright future. Now, having said that, I'm in total agreement with Mike has already presented in terms of this stock is oversold.
Yeah.
This stock has been hammered. Does that mean that it can't go down and touch 141 first? No. Absolutely
I think you have panic here.
Oh, yeah, but panic to me, even on a weekly chart, no. It's controlled panic. But I don't disagree with the statement. I think panic is more like if we go back to what was it, probably February, March of 2016. I think I just lost my power again.
Uh-oh. You're still here.
Well, I got one computer turned itself off, the other one didn't. No problem. But I just don't hold a lot of hope out for this company, and yet it had such promise. And the other thing to keep an eye out for is the competition is coming.
Yes, especially BMW and Audi.
Audi's come out with an electric SUV. Jaguar's come out with an electric SUV.
And imagine if GM ever decides to launch hard.
GM or Ford,
yeah,
for that matter. So I agree. So there's a lot of black clouds. They're gray right now, but they can turn black at any moment, sitting above Tesla. If you own the stock and you're not protected and you still are in a profit, you might want to consider taking what you can get. If you really are holding this for the long term, you're going to want to start trading that position. And what I mean by that is you're going to want to start selling calls so that you can manage the moves. You're going to want to be in puts so that you can manage these moves while you're holding on to that stock.
Yeah.
And that would be my take. But a bounce, yes. A move back towards 280 to 300, no.
No, I mean, there was a risk reversal today that was nice. They sold the July 150 puts to buy the July 215 calls. And I thought that was a decent bet. But, you know, again, he's looking for a move to 215 max. Maybe he's not looking to get there, and he's selling the puts. So, you know, he's mitigating his risk.
So it's one position they were buying.
They sold the put and finance it. They took in $6 plus on the puts, and they spent $8 on the calls. So he basically spent $6 out of his pocket for that trade, but he has the risk that if it closes below 150, I think it was 2,400 of them options. He needs to buy $2,400 times 100 of stock at $150 a share.
That's not a bad trade.
It's not. It may be
a very good trade, and that's the other thing, folks. It's like, unless you can go compete with that type of a strategy in that type of size, you know, that's who's going to win.
Yeah.
So, yeah. And that's what's at play in these big stocks. So it becomes very difficult to either play along or to hold on.
Agreed.
So again, I don't know. Next up, Citigroup. Strange things happening in the banks all the way around. We got a very strange market, but I'm glad Mike gets to go first.
I don't know what the catalyst is here for the banks at this point. point blank, I think the banks are stuck in this horrible range, and you know, they try to get going and they wake up and then they sell right back off again. And this has just been going on now for a year and a half plus. And honestly, I think there's just better places to put your money, Michael. I don't want to spend a lot of time belaboring this. You know, back below the 200-day, now right on the 100-day is last bastion here. I mean, I think it's one of the better banks. I think JP Morgan, and Bank of America are probably three of the best banks to own, but I just don't see huge catalysts here ahead for them as we move forward.
And you find them to be the best banks to own because?
I think they're just better run. JP Morgan, Citigroup, they're doing a better job of managing stuff. Goldman Sachs is just a disaster of late, right? I just think on the big banks, they're the better ones to be in. But there's just, what's your catalyst? Interest rates aren't going up. You know, trading revenue has been coming down. So what's your catalyst? Mortgage rates aren't going. You know, they're not doing mortgages. What's their catalyst here?
I think hope and some inside stuff, but that's me. I agree with you. I don't see the catalyst. I think that this will be very, very closely watched to see if these earnings can continue on the track that they're on. And I would think that if they can, then we should have a stock that continues to be in a nice range and a playable range. At the moment, again, I'm an Elliottician, so I look at the markets a little bit differently. But I have the 200-day, and again, I'm on the weekly chart. I got the 200-day at 62 and some change above 62.50, like 62, 69, 62.70. So we're right there. On the weekly chart, we're right there. And the last time that this broke through that was October, November of last year. Maybe it was even December. And it went sliding through it.
It dumped.
Yeah. So that it just dumped. And that would be fitting again. I see corrective patterns. It made a beautiful high. It was a beautiful and impulsive wave up to 80, 70 last year. And then it just has done nothing. It's done a clean 3 waves down. So if I had to say, if it can hold the 200-day moving average, there's a strong shot that it's going to go back up and it'll get it back above 72.5. Now, what's going to assist it getting there is extremely positive market or extremely positive for finance.
You're breaking up. We're definitely going to need something.
Yeah, what I perceive hanging out there, waiting to come in and get its notice or reconciliation or whatever from the markets. There's too much undone business sitting out there waiting. There's too much uncertainty, in my guess, which is what surprises me about how the market tends to trade and hold itself. But again, I think that a lot of that could be because of algorithms and computerized trading versus people sitting behind with a pencil and a piece of paper figuring all this stuff out. In any case, I would be looking at 62.50 if that's a 200-day moving average, and a break below there and not good. A break and a close below there is not good. It would portend that we're at least probably going to go back and test lows from the end of last year, around, what was that, 40? Yeah.
Wow.
Around 40.
That means the markets would be dumping.
Fair, good reason. What happens when somebody finally gets a hold of the news that the Chinese really have been selling 30-year bonds? What happens then? But it's not being put out there.
They hedge the algo. They buy it back.
I know, you're probably right. You're probably right. Okay, moving on, because boy, don't get Mike and I going on this stuff, folks. We could be talking for days. We have Shopify. which is a new one to me. And I'm like, oh my God, it's trading at $286 today.
I did a
Go
chart
for
on
it.
this yesterday. I'm like, this breaks. I said this, breaks 280. It's a buy, and I missed it today. I was too busy with other stuff, and sure enough, it took off. This name is Citron has been trying to short this name forever. I believe he finally said uncle. I believe this is the name he did the $100,000. He's going to owe 100. He said that by December or something of this year, it would be under $100, or he's donating $100,000 to charity. I believe he's already conceded.
Wow. Now, tell me, what does this company do? I know something to do with shopping, but
I don't know a lot about this company. I'm gonna go look it up while we're talking here.
I am looking it up, and I'm not finding.
It's a beautiful chart. It just keeps going. It keeps getting extended, and it just doesn't care. What does it do? Shopify. They're in Ottawa. They're a Canadian company, cloud-based. They're a cloud company. There you go. Microsoft, cloud-based cloud company.
And is it retail? They run shops, or
no, commercial platform for small to medium-sized business in the U.S., UK, and Australia. Provides merchants with a single business and customers of various sales channels, including web and mobile storefronts.
Wow.
So they're basically an Amazon.
Wow, the Canadian Amazon. I don't understand why it's trading at $285 with its last earnings being 9 cents. 9 cents.
This market just finds names they like and it piles into it.
I think you're right. You could be right. But again, I'm looking at the daily. Welcome back, David. I'm looking at the daily, and I see that, today was almost an anomaly against the momentum. My momentum indexes and my stochastic indexes. That because it's flatlining instead of it with that type of a pop, I would think that it should do a little bit better. But nonetheless, I think that this is pulling into a top. Now, topping processes are really hard to put a pin in and say, that's it. That's where it goes, and that's where it doesn't go any higher, because it doesn't take – it depends on how thin this stock is and what kind of volume it trades on every day.
It trades about 1 million shares a day, which meets my minimum criteria for a name I'll trade versus invest in, right? I'll invest in smaller names under it, but I'm not trading a name that doesn't trade 1 million shares a day because it's just too thin.
I think a million shares in a stock that trades at above $280 is thin, because you're going to get stuck, because I'm not sure how wide that bid and offer is, and so it makes it more difficult. Again, not having a lot of background in what potential it has, but knowing that it's an online company and they're offering similar type of platforms as Amazon. It's a Canadian company trying to grab that space in its own territory. I think that could be very difficult, and we'll see. But just based on technical basis, not necessarily anything fundamental, but on a technical basis, I think the stock could pull back. And I think if it starts to pull back from here, I would look for 240 to 260.
I think 260 the 21-day would be nice. If you got somehow to the 231 the 50-day, which are where it broke out from, I think on earnings, that would be a gift.
Right.
But looking at that day, I think this is a name they're going to continue to hide in, Michael. Unless the markets just turn over and roll over here, it'll pull in, but I don't think it's going to dump. I think they'll just continue to hide in this until they're just done with the markets.
Yeah, you could be right. You could be right. And I got it there. Where are you? I've got you here somewhere. Did I lose my internet? No.
I can hear you.
I know. Now I got to find my screen. There I am.
Church and Dwight. I haven't seen that name forever.
And I'll take that camera off because I don't want you looking at that. Okay. I'm at least back, but I have. Oh, there you are. God. Okay, good. I'm sorry, folks. It's just like, things start to happen and they get weird. Shopify. It's now on my radar. It's a big ticket stock. And let's see, which kind of also tells me, folks, it's like, if you're in it, I don't know if I'd want to buy it up here. I'd want to let it pull back first. Give me a little bit of a cushion. Give me a little bit of something. Yeah, but who knows what happens. CVX up next. Our pals.
I don't understand this name right now. You had this big gap down because they wanted to buy Endako, right?
Yeah.
And then they had earnings and they popped up, right? So you created another gap, and then you flagged, right. And then we all knew what was going to happen is, Oxy came in and upped the offer. Buffett came in and they let the offer they let APC turn them down, and they got $1 billion cash for Endako APC breaking the deal, which they said they're going to do in a buyback. So what's it do promptly? Instead of going and filling that gap, which you would think after not spending the tremendous fortune they would have had to spend to get APC, nope, now it gaps down more. We talked about XOM while you were gone, so I'll let you handle this if you want. But for me, there's just better spaces to be than energy right now. It's just, it can't get going. Go ahead.
Yeah, I'm going to agree with you. If you really want to play a company like Chevron or ExxonMobil because you want to be in the energy arena, just go play crude. And see, I think a lot of the movement was exactly what Mike was talking about. They make a statement that they're interested in purchasing another refiner, right? Is that what they were going after?
Yep.
Yeah. And then that attracts attention from Occidental Petroleum and then from Warren Buffett, from Berkshire Hathaway, and the battle begins. Now, inside of all of that, crude goes from 48 to 77 and then starts coming back down, reaches 60, runs back up to 67, 68, and then starts to just really come off as the fiddling with the oil market starts to settle out a little bit. And we begin to put together like what's really going on, what's going on between Saudi Arabia, what's going on between Saudi Arabia and Iran, what's going on between all the different oil OPEC nations, what's happening in Venezuela, what's, et cetera. There's a lot of news going on in this particular sector, in the energy oil sector. And so I think that for the fact that Chevron has managed to hold within $10 of its 2016 highs, 16 highs or 17?
Yeah, this year's
2017.
Yeah.
So
it's definitely one of my favorite names in the space.
Yeah, for stability. But yeah, I would keep an eye out because again, this is a big number or a big company in indexes that cannot escape what happens when that index corrects, or what happens when that index really starts to pull back or sell off. This one's going to have to go with it because it's a part of a larger or a broader market.
Agreed.
And therefore, I would continue to. Now they went up and tried to go back up above the 200-day, and this is on my daily chart. I got the 200-day at 119.22. Tried to get up there today, could not. Closes a buck below. If it really can get itself back up there and fill this gap, then the gap that it just created 3 days ago, then I would say, yeah, the market is going to continue to go higher, should break 122, 124, and then maybe even try to fill that gap. And that would just mean that the stability is back and okay, we're done with that junk that trying to buy that company. Now we're back to business. In lieu of that,
I just think there's better places to put your money right now until the sector wakes up.
Yeah. I'm definitely going to agree with you on that because I think it could slide down to 116, even a little bit below, and then rally. And again, you're just in tight space. You're in a tight space. For an $118 stock, a $2 move should be nothing.
Yep. But this thing trades in a very tight range.
Right. Right.
So we have a couple minutes to go. Do you want to do rapid fire a couple names, or do you want to pick one or two names to go over?
You rapid fire. You
rapid
go for
fire?
It. Yeah.
All right, let's do it. CHD, Michael. I haven't heard this name forever. Church and wait, I cannot remember the last time somebody brought this up, so I love it. It's actually a pretty looking chart. It doesn't create tremendous volume on a daily basis, so it doesn't get my attention. But you know, it's in a long consolidation pattern up here at a 52-week high, maybe an all-time high trading, and it had a big down candle today on big volume in this market. If it held 72, it's probably a safety name. I would try to maybe buy it off the bottom of that box at around the 72, the 50-day area 30.
And where are you going to put your stop?
71, no lower.
Yeah. Okay. No, I know because I think that's correct. That's good talk. Yeah. I like that. Okay.
We talked about USO. Crude.
We did talk, but just on Church and Dwight, the only thing I would add is that I think it's not going to hold 72.
I don't disagree. I don't know it. I just look at the.
I think it's just beginning. It's just beginning to correct, and I got first stop could be around 70, maybe.
Okay.
So
how about Kohl's retail?
What's the symbol? KSS?
Yep. You know, retail right now, there's the have and the have-nots. It's Target's been good, Walmart's been good. We have Costco this week. And you take these couple names aside, and it's been bad. Huge gap down on earnings, bad earnings, all the way down now. It's oversold. If you like Kohl's, you could try it down here. But honestly, to me, it's Target, Walmart, and Costco in the retail space, and everything else is just not worth my looking at.
So are they're more retail in terms of that they're clothes and appliances and stuff like that, or just what's their? I don't shop at Kohl's.
They're like a Target or a Walmart.
Target. Well, Target's got them beat in that space.
Yep.
And so I'm going to agree with you. I think you need to stay away from this. It is a very bad gap.
Yep.
A nasty gap down, and it's continuing. Although it does, on a very short-term basis, maybe a couple of weeks, it could bounce. But it's going to depend. I don't think it can draw a lot of interest now that it's dropped this far. But we'll see.
Agreed. XLNX, you know, this was last quarter's last earnings darlings, and now it's given back almost to the gap right now. And here's your 200-day. I actually still like this company. I still think it goes higher long term. 200-day, if the market holds in, I think at 97.83 is not a bad place to try it off of. But it can't regain the 8-day. What I notice here is since earnings, every touch of the 8-day has failed. You've had a bunch of them. So until it can retake the 8-day, for me, I'm not swinging this name. I would, again, AMD is my favorite name in the chip space. And then you have a gap here. If it wants the market jank, you have a gap to fill starting around 96 all the way down to 90.
Yeah. And the only thing, you know what I would add to this is the fact that this particular stock, because you mentioned AMD, AMD's grabbed the attention in the space. AMD stayed quiet for way too long. And that's because they were doing what they were doing. And then they just went out. Now, the fact that this particular stock, I'm looking at the weekly, and my 200 on the weekly is at 72, and mine on the daily is right where it's at.
Yep.
And that on the daily chart, on the weekly chart, it looks like it could put in another little bounce, just a little bounce, and then continue lower. But I don't think it goes down to that 200-day unless we've got a catastrophe. But on a near-term basis, it went up, and it looked like it was going to make an attempt to try to get back above the 200 on the daily today, but it didn't. Now, the fact that it closed positive within a negative overall market, I don't know how to really rate that or don't rate it, but I would stay away from this based on exactly what you just said. I think it's got additional downside. 95.90 looks clearly in the near-term picture. And with AMD screaming because of they got the upper hand right now.
Yep.
So I would stay away from it.
So what's our last one here? Roku. So
Yeah,
I
let's
love
do it.
this and Square, two of my favorite names out there. You know, what a move off of the low 20s of 26 all the way to 96 and change before today's downgrade. That's why it's down today, guys. It got downgraded by Stevens. Everybody says, well, who's Stevens? I'm like, I know they're not a big guy firm, but they were one of the first ones to embrace Roku. So they downgraded
Mm.
to market perform and put an 84 price target on it. And, you know, this is why I always tell people don't get greedy. You know, character change, CES this year, they halt the stock, they guide up, boom. Citron comes out and says it's gone. No, it's a piece of crap. Nope, recovers. Earnings, they guide up again, boom. Sells off a little bit. Next earnings, they guide up 3 times since early January. That's incredible. So I still think at some point it takes out 100. But right now, here's your first touch of the 8-day in a bit. See how it reacts here. And if it doesn't hold the 8-day after this huge run, watch how it handles the 80 area. There's a lot of Wall Street doesn't understand this, but if it can hold that 80 area in the breakout, it may be a nice bounce. But you have to just realize this thing's run so much, it's due for a little bit of a rest. Doesn't have to pull back, but it should rest at this point.
Yeah, I don't disagree. A couple of ways that I can really count this out again on an Elliott wave basis. Those beautiful rallies up towards just below 75, and then it does a sweet 3-wave pullback. So that's a correction, a pure correction. And I'm sure if I threw the Fibonacci's up there, they'd all fit. And then it puts in another glorious 5-wave rally with that huge green candle right in the middle of it, which is a third wave. And then it pulls back, and then it runs up to a new high, 95.95, and then the courtesy of a downgrade, which is not even a severe downgrade, it's just kind of a minimal downgrade, it comes right back into line, because I think it's completed either it could come back down to like 84-ish. That was the call. Maybe it comes back down there, runs back up, gets to that 100. But if it does that, then it's completing a larger 5 waves up off of that low at 26. And if that's the case, then it would be look out below.
Yeah.
Because from that level, then I think you could drop easily over time back to 60 to 55 or even lower, depending on the severity. Does that mean Roku's a bad company? No. Roku's killing them in its space. Roku's doing very well in its own space. But like you said, Mike, and then we'll wrap this up, you know, the markets get overzealous, they get over hungry, they just keep pumping things in, and it's not fair to the company, because Roku is doing well. Roku's got good product. Roku's got a good thing going for it. But over-evaluation tends to make everybody think that something's wrong.
Yep, and you got a bunch of people who traded this on Friday who went out long over the weekend because it closed on highs on big volume. We're a trap now up there.
Yeah. And hopefully they got puts.
Yeah.
Well, I'm Michael Filighera. I'm with Logical Signals. I have nothing more to add other than, you know, I will make a grand announcement when that website's all set. And if you're on our mailing lists, you will know about it. But I want to say thank you to David, and thank you, Mike, because I'm going to let you talk as well, Mike. I have so much fun when Mike and I get to do this particular show, because we get to just really talk the way I think that it should be presented to people. So thank you. And go ahead, and now you get to.
Well, thank you. I really enjoy doing the show with you as well. And thanks, David, for having me on again. Listen, if you want to learn about me, go to smartoptiontrading.com. I have a free newsletter you can sign up for. I have real-time option flow. And, you know, what I do here is I do a morning video every morning. I'm live for about 3 hours a day on top of that. And we talk about morning setups. Today, they were Square, Home Depot, Walmart, AMD, and Uber. Uber didn't work, but it never triggered. There was no reason to get into it. So I try to tell you guys where to focus on the day, and then we use the option flow and everything else based to get us in there. I do a recap video every night, so you get 2 videos a day telling you what's going on. All my trades, option flow, news, things going on in the day, charts depending on what's going on, you know, telling you what to do. And then a weekly mentoring or learning seminar once a week. And this is it's $25 for the first 30 days, $100 there a month, cancel anytime through PayPal. I can't make it easier than that, guys. It's very inexpensive, and then you get more information and better ideas than I think you get from 99.5% of the other people out there, other than Michael here and some of the other people that are on here with me, who I really think are just lights out. So thanks for having me on. If you're interested, come give me a look up, or at least sign up for the free newsletter and make sure you take advantage of that.
I am going to give you a shout out here, Mike. I have folks taken this service, and it's excellent. It's excellent. There's so much information that if you can't find something to trade, then you need to make a personal call to Mike and say, teach me.
Thank you.
There's a lot of information there, and he is at the top of his game. None of us are perfect.
Never.
But I like people that at least admit that, yeah, I'm not a good trader every day. I make mistakes.
All the time. You know, yeah. I own up to my losses, and today I stopped trading after 10 o'clock. I'm like, I'm done.
I'm done.
I'm done.
I have my daily limit. You're right. But thanks. This has been, I really enjoy it. In fact, I'm going to tell David, I will do this with Mike Pisani every week if you want. So I'm going to turn it back over to David. Thank you again, David.
Yeah, thanks, guys. Yeah, great show. Lots of good information. So just quick reminder for everyone watching to close the show out. Be sure to subscribe to Timing Research on YouTube and your favorite podcast network. And you can also go to TimingResearch.com to get access to the archive of this show or any of the past shows. Also, both of the shows will be back next week. Crowd Forecast News was off yesterday for the market holiday, but we'll be back on June 3rd. It's Monday, 1 p.m. Eastern Time, and the next episode of this show on June 4th at 4 p.m. Eastern Time. And just want to thank my guests again for today, Mike Pisani of SmartOptionTrading.com and Michael Filighera of LogicalSignals.com. Thanks, everyone.
Thank you.
Thank you, guys. Have a good night, everybody.
Bye.